Let's try to do a little bit of guessing. To discuss, we're joined by the Chief Economist at Stanlib, Kevin Lings. Great to have you with us, Kevin.
My pleasure, Francis.
Although an interesting day, how optimistic, how pessimistic, how many nails have you bitten off today?
Look, I think it's unfortunately still a close call. We've sort of rated it literally as a 50-50 view.
A lot of people saying that, so basically on the fence.
That's right, because some of the factors have deteriorated. Political environment has deteriorated. Growth rates in South Africa are very low. We know the state-owned enterprises are still struggling financially. But other areas we've improved. I thought the Minister of Finance did a great job in the medium-term budget policy. We're controlling government expenditure actually exceptionally well. And we've got a number of policy initiatives that we may well be able to implement over the coming months. The question is, will the rating agencies give us enough time to effect these changes? And clearly it's a close call.
And the Finance Minister has been working to avoid this, speaking to the agency, speaking to investors. Do you think a push like that could make a difference?
Oh yes, no doubt. We engage constantly with the rating agencies at the most senior level. They review us every 6 months. Obviously that's an extensive review. They don't just talk to government. They talk to private sector, they talk to the central bank, they talk to a range of participants. And then they go away and make up their own mind. So obviously the contribution or the efforts by National Treasury help a lot. They almost take them into their confidence, give them some idea of their thinking, where they're going with the finance numbers, what they anticipate being able to do. But ultimately the rating agencies make their own decision, and also importantly, they view South Africa relative to everybody else. And so this is a relative rating as well as an absolute rating. So it's a tough call, yeah.
And there's a bit of negative sentiment around these rating agencies in South Africa. Even our president has said here ratings are politicized as well. This can be a tool. Just remind us again, what is being rated and why is this important based on who is listening to those rating agencies?
So this is South Africa's international credit rating primarily. It's the riskiness of doing business with South Africa, particularly with the South African government. So it's rating agencies advising investors, advising businesses around the world to say, do we think that if you do business with South Africa, if you do business with the South African government, that you're going to get your money back? And ultimately, foreigners want to know that. They want to be assured they're going to be paid. And so the rating agencies give us an assessment about the likelihood or the prospect of you getting your money back. If your investment grade, as you mentioned earlier, or your credit rating is above investment grade, then it's considered a low-risk investment. In other words, there's a high probability that you're going to get your money back. If your credit rating falls below the investment grade, or so-called junk status, then it's a clear signal to all foreigners that the risk around getting your money back has gone up dramatically. And many foreigners take that cutoff as a signal not to do business with that country because the risk is too much. So
and if they do business, they hike those interest rates. And,
yes.
and that is money that can't be spent on healthcare, on other important things, basically.
That's right. So it doesn't mean you can't get money. You can always get money. There's no difference to dealing with a bank and then a local bank decides it's not going to do business with you because they regard you as too high risk. And so you go and deal with a loan shark. The loan shark's going to give you the money, but ultimately going to charge you a lot more. The same thing happens for a country. South Africa will always be able to access finance. But what is the cost of that finance, and are we willing and able to pay that cost? The lower your rating, the higher the cost. We just don't want that to happen.
The sovereign debt rating linked to the foreign currency debt, and government is always saying, luckily, we have borrowed in rand terms, so we have to pay back in rand. To what degree does that protect us?
So that's an enormous protection. Most of the debt that the South African government has is local debt. We owe it to local creditors. We don't owe that much. We owe some money internationally, very small, manageable. So what matters more for us is our domestic credit rating versus our international credit rating. That sounds a bit odd because many countries are exactly the opposite way around. But in South Africa, we're in that fortunate position. At this stage, our domestic credit rating is from Standard & Poor's 2 notches above junk. So that gives us a buffer, if you like. that we're still safe in terms of domestic credit, a bit more risky in terms of international credit.
Why then are we so worried? Is there a sentiment that this drives?
So it's a slippery slope. Once you move below investment grade with any of your credit ratings, it starts to spark concern by international investors to say, this could continue. What happens if other rating agencies follow? What happens if the government doesn't turn things around? Then potentially all of your credit ratings are so-called junk, and this is a high risk. So it's a first clear signal that the economic and financial environment of a country is deteriorated. It's not disastrous. It all depends on how do you react to that. Do you immediately try and improve things, lift the rating in time, or do you allow it to deteriorate and the rating will then weaken further? So on its own, yes, it's manageable. But does it signal that further deterioration is expected?
Well, a lot of the doom and gloomers say if you look at other countries, once they enter junk, it takes years to come out. And why is that?
Because you've got to prove that you are a better risk before the rating agency will trust you again. In other words, it takes a long time to say, look at my finances, I've done a lot better. The rating agencies would then say, okay, I can see they've improved, but how do we know you're going to continue on at that? And they're going to take time to assess that any improvement has durability, any improvement is going to last, so they don't immediately upgrade you once things improve. And generally that then takes a number of years.
And this sentiment effect, what I was going to ask you is, does it affect other things? You know, if Ford is considering expanding investment in South Africa, does it spread out?
So all companies around the world that invest in other countries would look at the credit rating and say to themselves, how risky is this country that I'm going to be doing business in? And they obviously want to know that they're dealing with a low-risk country. So as your credit rating falls, other companies would be affected. It doesn't mean they don't invest, and it doesn't mean they withdraw investment. But clearly it makes it a lot more risky. And again, that just adds to the cost of doing business. It's not as if companies don't invest in junk status countries. They do that all the time. But again, they do it at a higher cost. And South Africa, I would argue, we can't afford that higher cost. Already our budget is massively stretched. If we have to pay more for the debt, it takes away from what we could be doing more worthwhile with that money.
It's already said 12 cents in every rand just going to those.
That's right. And it's the fastest at the moment. The interest cost of debt, the interest, not the debt itself, just the interest, is the fastest growing component of South Africa's national budget. It's growing faster than what we're spending on education, faster than what we're spending on healthcare. If the credit rating continues to slip, then that cost of financing will escalate even more. And before we know it, it's taking up a big chunk of our taxpayers' money. Money we should be using for housing or healthcare or other social services. So it's something you want to avoid.
I think that really highlights it. Before we let you go, what sort of market reaction are you expecting? Because we may even see this tonight. Many people saying it's already factored in the junk status. Does that mean we won't see the rand plunge immediately?
I think some of it is factored in. Remember, the rand is already relatively weak. It's a lot weaker than I think it ought to be. Some of that reflects the risk. Some of it reflects political risk. Some of it reflects the credit rating risk. I do think on an announcement of a so-called junk status, you'll see markets sell off and then hopefully correct a little bit from an oversold position. But there would be weakness in our financial markets broadly.
All right, well, let's wait and see. Thank you for that preview while we wait for S&P's decision. Now, the rand, in fact, has been trading firmer ahead of that rating decision. That's crucial for our economic future. That, however, seems to be linked to disappointing jobs data in the United States. The US added 178,000 jobs in November. That was fewer than expected. That means the rate hikes that are expected in America could be slower, perhaps, which is positive for investment in South Africa. And the rand usually reacts positively. Markets are generally nervous ahead of that rating decision at home. There was the jobs data in the US and a referendum in Italy that will be held over the weekend could create some political uncertainty. Along with that, the JSE plunged by more than 8%.